Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and we are covering a very special topic here today on what tools you can use that are available to you here at StockCharts.com that can help you outperform the markets that will potentially change the way that you view and approach options trading. I'm very excited to be hosting this here today, showing you some of the tools that are available to you through your StockCharts.com account that you can add on as part of the options play integration, how they work, make sure you clearly understand the value of it. So that you can make a decision as to whether it belongs in your tool set as options traders. Let's go ahead and get started. But before I do, what we are going to discuss here today is purely for education and demonstration purposes. So before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I'll be using as example purposes during today's session. So let's start off by just clearing kind of what I'm hoping to accomplish during today's session. First of all, the goal here really is to show you how OptionsPlay automates in finding the best yielding options strategies that are personalized to you in real time. And I'm going to show you what that means, but essentially what we want to do is help you find the best yielding opportunities in the market, but make sure that they're all personalized to your personalized preferences. Each one of us as options traders have preferences as far as what strategies we like to trade. And even within each strategy, we all have different preferences as far as perhaps how far out we like to go in terms of expiration dates, how conservative or aggressive we might be within our own risk tolerance. So what we want to do is show you how you can fully personalize each individual strategy to you, but still find the highest yielding opportunities in the market that will be aligned to the overall direction that you might have for the market or for an individual security. So in that, what we're going to do is we're going to spend it in two separate sections here today. We're going to talk about the strategy center, which is at the core of the OptionsPlay add-on. That's going to be your primary tool that you use here at StockCharts.com as an options trader to help you find the best yielding opportunities. I'm going to show you how this saves you hours of research in even a single day. And we built these tools because as options traders ourselves, we found there were too many steps that was required before we found a valid options trade. And too many points of that process, we would either, for one reason or other, disqualify a specific trade idea. And what we wanted to do is we wanted to automate every single step so that everything that was shown to us based on the strategy center is something that we could potentially execute as a trade, so that we didn't waste our time researching, looking at charts, looking at options chains for trades that eventually we weren't going to be able to execute. So I'm going to walk you through those steps and kind of what we've automated and how it can save you hours and hours of time every single time you're looking for a trade idea for options trading. And then we'll show you the strategy explorer. This is fully integrated into your ACP and SharpCharts, which I'm sure many of you are using for your trading for technical analysis here at StockCharts.com, and showing you how you can utilize the integration that's in your ACP and SharpCharts to optimize and find the specific strategy that might suit you for any stock or ETF that you have a view on using ACP or SharpCharts. So what I'm going to walk you through here today, first of all, is how to automate the OptionsPlay Strategy Center, or rather how the Strategy Center automates the different steps that you might take as a options trader, and then show you kind of what it means to find these real-time personalized strategies. So how can you find and validate trading signals from StockCharts.com and use those to automatically receive ranked option strategies from OptionsPlay so that you can quickly, seamlessly execute these trades, hopefully saving you hours of research every single day. Like I said, we built these tools for ourselves, and we have found that these tools are incredibly useful for just about anyone who's an options trader. And it took many, many years to develop these tools so that you can screen the full options market in real time. As you can imagine, with 1.5 million option series available for trading and streaming quotes across all 1.5 million option series, it takes an incredible amount of computing power to be able to screen that in real time. And that's really kind of what we built our technology on, and that's what you're going to be able to access through StockCharts.com. So the best way to think about the strategy center is to think about option strategies in real time that are fully personalized to each individual user's preferences for strategies, as well as your preferences within each individual strategy. So let's kind of talk through, like, what are the steps that it takes for an options trader to come from idea all the way through execution of an option strategy. I'll just kind of quickly walk you at a very high level. As an options trader, when I'm thinking about placing a trade, the first thing I want to do is identify security. So either a stock or ETF that I have a specific view on, whether that's a bullish or bearish view, and whether you use technical analysis or fundamental analysis, whatever method you use, you have to first select a security. Once you select a security, you then have to look at the options chain or look at the available options on that security. And what you want to do is you want to find the strategy that meets your specific outlook for that stock or ETF. So for example, if you have a stock that you believe is going to rally substantially over the next 30 days, there are certain strategies that might make sense for that, such as buying a long call option. Or vice versa, if let's say you have a stock that you think is going to move a little bit lower to the downside, but maybe not by a whole lot, there's a different strategy that might be suitable for that. Maybe you want to sell a call spread in that particular instance, or maybe you have another security where you feel that the stock is just going to be range bound for the next 30 days. You might have a different strategy suitable for that, such as an iron condor. So what you have to do is you have to first identify security, using a mixture of technical, fundamental analysis or statistical analysis, determine your outlook on that security, then find or know, which option strategy you might want to trade for that strategy, and then pull up the options chain to actually secure the specific expiration dates and strike prices that make sense for that specific strategy. And then once you've done that research, once you've pulled down the options chain, once you've pulled down the expiration date, the strike price, look at the quotes for that specific option, then you have to look at the price of that option, the liquidity of that option to determine finally whether or not you're going to execute that. So there's a lot of steps, as you can imagine, to go from idea all the way through execution. And what we have found as options traders is that, over the years, as we have traded thousands of these types of trades, considering there are so many steps in that process to execute a trade, many times throughout that process, at some stage of that process, we say, oh, even though we really like the security, we couldn't quite find the strategy that made sense for that specific strategy, for that security. Or we got all the way down to pulling down the strategy, the expiration date, the strike price, and when we look at the price, and we realize the price of the option doesn't really make sense or is not particularly favorable for that strategy, or the liquidity of the specific strategy or the option that I'm trying to trade isn't sufficient for trading. So what you end up doing is you do a lot of work, and by the time you get to the fourth and fifth step, the final steps, you then realize, wait, this doesn't quite make sense. Now I have to start from step one and identify a new security to potentially go through that whole workflow again. Now, how many of you can relate to that? Type 1 into the chat window as options traders if you can relate to that, where you've done your work, and you can type that into the chat window. You've done your work you've done all this homework on the underlying security, right? You've done your technical analysis, your fundamental analysis, and you have a pretty strong conviction of a specific stock, but somewhere down the line, as you do your options trading research, you realize that it doesn't quite make sense. Either you can't find the right strategy, the pricing of the options don't make sense, or the liquidity doesn't make sense. I see a lot of ones. So for all of you that can relate to that one issue, this is why we built OptionsPlay, and that's exactly what the Strategy Center is designed to help solve that very problem. Because And just to add on top of that, there are many fantastic tools, such as the screening capabilities of StockCharts.com that allow you to do the first step, like security screening step, right? Where you can use technical analysis, um, scans that you can build and basically help you identify out of, let's say, 6,000 optionable securities, maybe 30 or 40 that you might want to trade for today, right? And we have either used some of these scanning capabilities in StockCharts.com, or maybe you use them as part of your process every day to identify stocks. But one of the biggest problems that I find with stock screening tools for options traders is that if you have a stock screener that you really like, right? It provides stocks that are bullish for you or bearish for you, and it's a great screener. But the problem is that if you get 30 different stocks out of a screener, meaning if a screener tells you here are 30 stocks that are bullish for today, the problem is that you don't have the time, you don't have the ability to pull up 30 options chains to look at those 30 stocks. One, you probably don't have time to look at 30 charts to begin with. But I will say one of the reasons that I use StockCharts.com myself is because of the chart list. It allows me to look through 30 charts very, very quickly and identify out of those 30 names, maybe three or four or a handful that I really would want to trade from a chart perspective. And then, but even that, if I've identified 5 stocks out of 30 that I like trading, I don't really have the time to go through 5 options chains, structure those trades manually, go figure out the expiration date, the strike price, look at the price, look at the liquidity, and then decide whether it's something I want to do. Because a lot of those times, even if I only have 5 ideas, probably only one or two of them are worth trading. I don't have the time to go through all 5 to figure out which of those 5 are worth trading. I want tools to help automate that for me so that I can skip the time doing the research and focus my time on executing the trade and, more importantly, managing the trade, not all my time researching on trades that I'm not going to ultimately be able to execute. So that's really kind of why we built this tool, is to help you automate all of these steps so that everything that you are shown on your screen are strategies that you can potentially trade. And more importantly, those strategies are ranked from best to worst so that you can focus your attention on the ones at the top of the list. And as soon as you find one that you're comfortable with trading, you can execute that trade because it already meets all of the other criteria that is required in order to trade that executed to execute that trade on your broker's account. So let's go to the strategy center and show you how this works. So on StockCharts.com, right at the very top of when you log in, you'll see the OptionsPlay Strategy Center in this green box here, right above or at the top of your dashboard. Okay, so you can access it there. You can also go to Charts and Tools, and you will see the OptionsPlay Strategy Center under Research Tools. So there's a few different ways that you can access the Strategy Center. We try to make it as easy as possible for you to find it, especially if you're using this platform on a daily basis. It's hard to miss. And when you click on the Strategy Center, it's pretty simple to use as far as how this works, because it basically spits out options ideas that are ranked for you with basically minimal input from you, meaning you can use it right out of the gate without any input if you like. But for those of you that have more personalized preferences in terms of strategies or parameters within those strategies, this tool gives you full control and personalizes everything to you and does it all in real time. So what you do is you basically start on the very upper right-hand corner, and the first thing you want to select is a specific technical scan. Now, we have 6 pre-built scans for you, and we limited it to 6 because we felt that for most traders, these 6 should be more than enough in terms of helping you find ideas in the market. There's 3 bullish ones and 3 bearish ones. There are, so it's easy to remember. And what we have are 3 different categories within bullish and bearish. You have trend following ideas. So that's pretty obvious, and I'll show you some of the charts that kind of help you visualize what a trend following idea looks like. We have counter trend ideas. So one of the trend following ideas are basically you're trying to go with the trend. Counter trend ideas are effectively you are trying to identify the turning point of a trend. So something is very bearish, you think it's now going to turn bullish, or vice versa. And then lastly, we have outperformance and underperformance, meaning what are the stocks that are beating the market and what are the stocks that are underperforming the market. So, I would say that when we categorize rather technical strategies. So when you're looking at kind of trading strategies that are based on technical analysis, they generally fall under one of these three categories. You're either following a trend, you're either trying to identify the trend very early, or you are trying to find stocks that are breaking out or breaking down, right? Those are the kind of primary categories of strategies. Now, if you want to learn about how we identify trending stocks, counter trend stocks, and outperformance stocks, we actually have the details of all of our technical scans available for you to audit. So these are fully transparent scans, so you can replicate them yourself. We tell you exactly how they're built, so that this isn't some secret sauce black box that we built. These are scans that you can replicate yourself if you wanted to, using the strategy workbench within StockCharts.com. But what we've done here is we've just automated it for you so that you can quickly identify bullish stocks, bearish stocks, regardless of kind of what your preferences are for technical strategies. So in the market environment that we are in today, right? Maybe let's look at some bearish trades instead of some bullish trades, given the market conditions that we're looking at here right now. So what you can do is you can effectively select bearish trend following ideas, you can select bearish counter trend ideas, or you can select bearish underperformance ideas. So we'll look at a few different ones here, but let's take a look at bearish underperformance. And what this means is that these are stocks that are starting to underperform the broader markets. So let's look at Amazon. I'm going to use Amazon just because Sucor Energy is not, which is the top trade here, is probably one that not everyone's familiar with, but I would imagine that everyone's familiar with Amazon. So let's just take a quick chart here of Amazon, just to help you understand the trade structure here. So what we've seen here is a stock that clearly has broken support recently, broke the 215 support. And what we've seen is that as it breaks support, it also is underperforming the S&P 500. So that's what we're looking for, right? Are stocks that are underperforming the market, breaking down support, and kind of starting to break down, right? So breaking below support, and we think that there's further downside. So those are the kind of the primary criteria for underperformance. If you're looking at counter trend, let's look at something like AT&T. What we're identifying are stocks that are so overbought that there's a higher likelihood that this will start to pull back, right? So, stocks that have just run so far that there's a higher likelihood of a pullback. So this is more for those of you that like to be a bit more speculative, that want to basically try to capture a trend at the earliest possible turning point. That's what counter trend moves provide you with. And lastly, trend following ideas, I think, are pretty self-explanatory, but I'll show you kind of Biogen as an example. So what you're looking for is stocks that are in a clear downtrend, and what we're looking for is in stocks that are in a clear downtrend that have exhibited these kind of small upticks, right? These small upticks are kind of your optimal times to enter these bearish trades, right? So what we're looking for is a primary bearish trend, but we've had a bit of a small rally here, and what we're looking for is the continuation of that trend. So Biogen looks like that. Let's look at General Dynamics real quick. And like I said, you can audit kind of which specific technical indicators we use to find these. So this is General Dynamics, as you can see, in a clear bearish trend. And whenever you have these bearish trends and you have these small rallies within these bearish trends, they become really good opportunities to enter a short position and look for that quick move here to the downside. So those are the ideas that we're looking for. And maybe let's just go with bearish trend following for 1 second, right? Because I think that might be suitable for the current environment that we're in. So as soon as you select a technical scan, our tools will automatically populate a strategy, a time frame, a risk profile, and max risk. But these 4 things are what you can start personalizing to you, depending on your preferences for strategy and your preferences for time frame, risk tolerance, as well as also the total amount that you have to risk on a trade. So, for example, when we select bearish trend following, it'll automatically select an option strategy that makes sense, a simple option strategy that makes sense for the specific scan. So, because this is a bearish scan, we're looking at buying put options. Does that make sense, everyone? So what we're going to do is we're going to select put options, and whenever because it automatically selects put options for you, it'll automatically select the time frame and the risk profile for you. Now, this selection is based on years and years of quantitative backtesting research that we have done as a firm. We've been around for 14 years, and we've done a lot of backtesting of option strategies in that time. So what we do is whenever you select an option strategy, we will automatically populate a time frame and risk profile based on what our research shows as the optimal starting points for those specific strategies. But you can always customize it. Some people like to buy shorter dated options. Maybe you like to buy put options that expire in 2 weeks' time instead of 30 days. You can customize these. Or maybe you like to be a bit more aggressive, meaning you like to buy, put options that are out of the money. You want them to be really cheap and you want them to have a really high potential risk to reward. And maybe in this particular case, you're only willing to risk $1,000. You customize these strategies based on your portfolio size and your personalized strategies. And when you click on update, we basically re-rank all of the stocks that are currently have a bearish trend following signal for the specific strategy that you're looking for. So if let's say instead you like to be really aggressive short-term calls and you only have $1,000 to risk and you want to buy puts on these stocks that are currently exhibiting this bearish trend following scan, what we basically do is we basically say out of all of these ideas, these are the 7 stocks that we can find a 14-day aggressive put option to buy that is under $1,000 that you can risk. And what it does is it ranks it for you. So that number one, not only do you not have to do all the research on all of these stocks, right? Because, if you get a list of 17 stocks, it's going to take you a bit of time to go through 17 options chains, look at the 2-week aggressive put options, risking $1,000, look at the price and say, okay, does these put options look cheap for me to buy? Does it make sense for me to buy these put options? Because if you're buying something, you obviously want to buy it because it's relatively inexpensive, right? That's why you want to buy a put option. So this basically helps you look at kind of the options that are available and ranks it for you. Not only does it do the work for you, it also ranks it for you. And I think that's really important because even if I have 7 stocks that I know, okay, these are the 7 that are very liquid, these are the 7 that I potentially trade options on. If you had 7 different option strains that you had to pull up, by the time you look at the 7th one, you would have forgotten what the first one looked like, right? And certainly by the time you looked at the 7th one, the quotes for the first one would have been stale. So this, what it does is it pulls 7 options chains in parallel, processes for you, and ranks it for you so that Las Vegas Sands has some of the cheaper put options to purchase out of the list of 7, right? So let's take a look at a Las Vegas Sands. What we can do is once you've customized the strategy to your personalized preferences, you can then take a look at the chart here, right? So let's look at this chart. This is a stock that, recently broke down below 47. It's come back to retest this 47 as a resistance. It's come back again, and maybe now's a good time to enter a new short position here for Las Vegas Sands, right? So we've done the work on the technical side of things, and then what we've done is we've done the option strategy part for you as well. So this is saying buying the March 14th option, which expires in 10 days, buying the $44 strike price when the stock is currently trading at 44.83. This will cost you 85 cents for this put option, and the break-even price is 43.15. So the stock has to move about 3.75% to the downside in order to break even. And you can kind of right, and you can look at this even further, right? This will kind of explain the strategy to you. It will look at kind of the expiration date, the liquidity of the option, and how many contracts you can buy so that your risk is within $1,000. So you can buy 11 contracts of this Las Vegas Sand, and here are the bid-ask prices. So you can see what the current bid-ask is, what the delta is, how much volume and open interest there are. So all the kind of detailed information that you might want to see before you click on trade to be able to kind of rank if you like to buy put options, this is the best put option to buy. And I saw a question here about other strategies. And yes, you have all the other strategies available to you here as well. So some of you might prefer to be a seller of option strategies. So for example, let's say you want to try a bear call spread. Now notice when I selected bear call spread, it automatically selected a 45-day aggressive risk profile for me because this is automatic. This is based on our quantitative research. We want to give you the best starting points for each strategy that you choose and give you the minimal amount of input that's required before you can start seeing some strategies that make sense for you. So here, the only thing I've done is I selected bearish trades and I selected that I like to sell options. I like to sell bear call spreads, and I'm going to click on update. And basically it pulls in real time, as you can see, in 2 seconds, less than 2 seconds, those 7 stocks that have, in this particular case, option strategies for this specific trade, and it basically selects the 45-day aggressive credit spread and ranks it for me. What is it ranking by? It's ranking it by risk to reward ratio. So Zimmer Biomet Holdings, which I'm actually not quite familiar with that particular company, trading at 104 right now. If I sold the 105, 110 strike, I'm going to collect $1.90. That means I'm collecting 38% of the vertical width. And as you can see, if I go further down the list, the ones that are near the bottom of the list, I'm collecting less and less percentage of the vertical width, which means I'm collecting less premium and I'm taking on more risk, right? So here, for every $1 I can potentially make, I'm risking $1.60. But as you can see at the one at the bottom, for every $1 I can make, I'm risking $2.80. So I'm risking a lot more for every $1 I can potentially make at the ones at the bottom versus the ones at the top. So this is, again, designed to not only help you screen for stocks that have a bearish trend, but more importantly, help you rank them based on the specific option strategy that you might like trading. And it does it all in under 2 seconds for you. So every single time you want to place a trade, you can potentially find a trade in under 2 seconds, not the minutes or hours that it might take you to research the best trade idea. And you know that you're not leaving any rocks, any stone unturned because, manually, you probably wouldn't have the time to even go through 7 options chains. Here, you've gone through all 7 options chains. You're comparing apples to apples for every single stock, meaning you're looking at the 45-day aggressive credit spread, and you're saying basically rank them for me out of these 7 stocks. So I know out of these 7 stocks, which ones I'm going to trade are going to be the ones with the best risk to reward ratio for me. And I'll just go through a few more examples just to try to drive this home and just how easy this makes it for you, right? So let's look at some other stuff. Let's look at bearish underperformance, right? Let's go back to that. So before, when we're looking at bearish underperformance, as you can see, there are a lot of stocks that are underperforming the markets right now, right? So this is a great scan for me to look at here at the moment, given the market conditions that we're in. So let's say I don't want to buy puts. Let's say I want to look at selling those bear call spreads, right? If I click on update, now I basically re-ranked everything based on the bear call spread. As you can see, all of these kind of ETFs have now gotten to the top of the list, even XLK. So for example, an XLK, if I sold, XLK is trading at 216.99. If I sold the 222.30 strike, I'm going to collect $4.10. So that's 41% of the vertical width. So for every $1 I can make, I'm only risking $1.4 for this credit spread. That's not very common. You find credit spreads for every $1 you can make, you're only risking $1.40. Most credit spreads for every $1 you make, you're risking closer to $2. And that's why we built this tool, because as you can see, there are some times where you can find credit spreads for every $1 you risk. For $1 you can make, you can risk close to $1.30, $1.40, $1.50. It's not common. It's not easy to find them, but our tool makes sure that you've gone through every single security on your bearish list for the specific strategy that you like and ranks it for you so that you know the ones at the top of the list are the ones that give you the best potential risk to reward, the best yielding opportunities for this specific stock. Now, let's say you don't want to buy options. Let's say you don't want to sell options. Let's say you want to buy options, right? So when you select a bear put spread, here, as you can see, it automatically switches to a 60-day balanced risk profile. Let's click on update and let's look at let's look at buying some options because, if you're concerned about some further downside, you want a positive risk reward ratio. You want for every $1 you can potentially make, you want to risk less than that, right? So for example, if looks at XLK, if I bought this debit spread, for every $1 I can make, I'm only risking 40 cents, right? If I bought the 221.95 put spread on XLK expiring in May, I'm only paying $7.50 for this $25 wide debit spread. That gives me a risk to reward ratio, like I said, of $1 I can potentially make versus 40 cents that I'm risking on that. So it's only about a 2-to-1 2.5-to-1 risk to reward ratio if you think about it the other way around. And the ETF only has to decline down to 212.50 in order for me to be profitable. So let's take a look at chart here for XLK, and you have the direct integration into SharpCharts, which I love because I can look at this chart here. As you can see, it recently broke down below this 222.5 support level. So this is a major range that it's been trading in for a while. It just broke, and as you can see, not only did it break from an absolute perspective, it broke from a relative perspective. This is looking at XLK relative to the S&P 500. So what we're looking at is how does the ETF compare relative to the S&P 500? And what we're identifying is stocks that are not only breaking support, but they're also relatively underperforming the S&P 500. Those are stocks or ETFs that have a higher likelihood of continuing that bearish trend. So I've gotten everything I need here. So here, I've looked at XLK, Keysight, Amazon, Alphabet, Qualcomm. These are the ones that are going to give me the best risk reward, but the best one is going to be XLK. If you look at the risk reward, let's say Keys, Amazon, and Alphabet, these three give me very similar risk to reward ratios. As you can see, I'm paying about 35% of the vertical width here. That's going to give me about a 2-to-1 risk to reward ratio. And the other thing that you can look at here is the earnings flag, right? So Amazon and Alphabet both have earnings before this expires, right? So when I'm buying options, that's actually a good thing, right? I want the potential catalyst that can make the stock make a big move and for me to capture that 2-to-1 risk to reward ratio. So I can kind of also dive a little deeper beyond just the option strategy. I can also look at things like options liquidity. I can look at open interest versus volume. Some people really like to look at that. So for example, Keys obviously has a lower open interest and volume, and maybe you prefer trading something with higher open interest and volume. So looking at Amazon and Alphabet, obviously those are very liquid. So you get all of this insight from this tool, and like I said, I can't express to you enough how much work this saves me as a trader. And I put out trade ideas as a strategist, multiple times a week. I trade quite a bit of these strategies myself. I simply don't have the time to do the research, to look at, all these different scans, screen these scans, then pull up all these options chains and do the work manually. That's why we created this tool. And I hope that you guys see some value in this for your own trading as well, especially if you value your time. Does that make sense, everyone? Please type 4 into the chat window if that makes sense to you. So you pick your strategy. You pick your scan, you pick your strategy. That's all you need to get started. For those of you that have a little bit more experience trading each of these strategies and have your personalized preferences, you can personalize these strategies. So for some of you, you might maybe want to be more aggressive or more conservative. Maybe you have more to risk. Maybe you have less to risk. So for example, let's say you have a small account, right? And I think this is a great example, especially for those of you that have small accounts. So let's say you have small accounts. Well, guess what? You have very limited options, but this basically helps you remove all of the options that you shouldn't be trading, right? So here I found you 30-day. Let's look at more balanced approaches and see if we can find a few more, right? So PayPal and EOG, those are your only two choices if you cannot risk more than $250 on a trade. So let's say you have a $5,000 account. You want to make sure that no matter what, one trade does not risk more than $250. Well, here, this tool basically helps you screen out 95% of the trades that are too big for you, that don't suit your portfolio size, and you can now just focus on just the two opportunities that make sense for your portfolio size and do the work. So all the things are available to you at your fingertips with just two inputs, right? Think about the other inputs that you normally would need to find a true option strategy. You have to find a technical scan, you have to pull up an options chain, you have to select a strategy, you have to select an expiration date, select the strike price, do all of the analysis. This basically automates the entire workflow for you. And then at the end, ranks all of it for you so that you know, okay, I'm picking the best possible yielding opportunities for every strategy or every specific type of screen that I'm looking at right now. Okay, so this is all available to you within your StockCharts.com account. And before I kind of even show you kind of the ACP integration, I saw a lot of questions about, how much does this cost? It's $40 a month. We think that's a very, very reasonable price point, and you get the seamless integration with StockCharts.com. So you get the screening capabilities of StockCharts.com with the option strategy capabilities that I showed you here right now. These are fully personalized option strategies to each of you. You can select from long calls, long puts, cover calls, cash secured puts, debit spreads, credit spreads, iron condors, and these top ranked strategies are at your fingertips so that you basically can find the best option strategies for any scenario within 2 seconds. This is designed to save you time and help you trade in a much more smarter fashion than manually going through all the steps that you would have to do pulling an options chain to find these types of strategies. And one of the things that we do offer here alongside your access to these tools is we do members only options education sessions as well. And the next one is coming up on March 18th. That's in 2 weeks time at the same time, 12 p.m. Eastern. In 2 weeks time, I'm going to be doing a session on the #1 option strategies that hedge funds use. So I'll be walking you through what that strategy is, how to use these tools to help you find the same opportunities that hedge funds use for this specific option strategy. You will get access to that if you simply become a member. It's $40 a month. It's a relatively small commitment. And I want to show you today how you can basically use the tool on the first day and generate enough income to offset the cost of your monthly membership on day one without adding any additional risk to your portfolio. So I'll do that here in 1 second. But if you want to sign up, Audrey has been kind enough to already send the link into the chat window. You can click on that link, or you can point your phone to that QR code so that you can access the OptionsPlay add-on as part of your StockCharts.com membership to access the tools that I showed you here today. Let me show you kind of the tool that I think that any of you that are using this particular strategy, you can use to generate some income on your portfolio to offset the cost of this tool. So I'm going to pull up what's a stock that many of you might have in your portfolio. Let's look at NVIDIA, for example. And I think NVIDIA is probably a good candidate for this right now. So NVIDIA, as you can see, recently struggling a little bit here, but I really like the fact that so far it's holding this 115 support level here. I think that's quite encouraging for the overall markets, not just for NVIDIA, the fact that we're holding on to these levels here. What I want to do is I can show you how you can utilize these tools. So if you go to the options under tools and resources on SharpCharts, and I'll show you how to do this in ACP as well, you have the full options chain. For those of you that want to do the work manually, you can pull up the options chain, select an expiration date, and do the work yourself to figure out of this page what strategy you want to choose, what expiration date, what strike price. Hold down the prices, do the manual calculation, and then decide whether it's a strategy you want to trade or not. This is how I did it for many, 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 many years. I started trading options 19 years ago, and at the time, this was the only way to do it, right? We started OptionsPlay because we felt that there was a better way to trade options than having to stare at these pages all day long. So what we built was a tool that's called OptionsPlay, which you can also access as part of your OptionsPlay add-on directly on your ACP or your SharpCharts screen. So let's say you own NVIDIA, right? Let's say you own, and you can plug in any stock, replace NVIDIA for any stock that you own. What you can do is you can click on the income section here under the Options Play tab. And what it does is it helps you find a cover call to sell. So for example, in this particular case, I'm taking a very conservative approach here. I'm selling the April 17th 145 call option. Just to put that into context, 145 is all the way up here, meaning by April, the stock would have to be above 145 in order for my stock to be called away. If I got called away at 145, I'm basically getting called away at the all-time highs. And what I'm doing here is I'm going to collect $156 in income for this particular option. So $156 worth of income, and I'm not adding any additional risk to my portfolio by selling a cover call, right? This tool identifies the specific expiration date and strike price for you, tells you how much income you're going to collect, how much yield that is. That's 11.93% yield on this particular cover call. That's a pretty nice return. I'm basically getting 1.37% of the stock's value in 45 days. $156 will offset a few months worth of this subscription service on just one trade that you can execute on day one when you subscribe. Like I said, just plug in the stock that you own, replace it with any stock that you own. Let's say you own, I don't know, Boeing in your portfolio, right? Whatever stock that you own in your portfolio, Boeing is really taking a hit here today. Obviously, on tariffs, Boeing is going to take a hit, and that's a good candidate potentially for selling cover calls, right? Cover calls give you some income, give you a little bit of downside protection while you wait for the stocks that you own to potentially recover. And here, as you can see, it automatically tells me to sell the April 17th 185 cover call. I go to the income tab on the Options Play tool. I go to the income tab. It tells me to sell the April 17th 185 calls, and that collects $136. That's going to offset, more than 3 months worth of this particular service. And this is the one strategy. This is the single option strategy that you can trade that does not add additional risk to your overall portfolio. You're generating income, and in exchange for that income, you have the obligation to sell the stock if it recovers to that price. And just to put that into context, 185 is that the stock gets back up to here, right? So the stock would have to get back above 185 in order for this stock to be called away. If it does, maybe you make a nice profit. If it doesn't, you keep the $136 and you can sell another cover call in 45 days. And the idea is that if you can generate $135 in income every 45 days, you are going to easily overcome or pay for the cost of this service. And that doesn't include any of the other trades that you can potentially make using the service. I just want to show you how you can get enough value from Options Play to just pay for the service itself on day one so that you can use this tool for the rest of the month with the income that you've generated on day one to pay for the access to the tool. And this is all available to you instantly through StockCharts.com. So everything is fully customizable and fully integrated into your StockCharts.com account. And I'll just show this to you in ACP as well, since many of you do like to use ACP, the advanced charting package. So in ACP, the options tool is basically at the very bottom, right? So the options chains is at the very bottom of your ACP screen. When you click on that, you get the same straddle view, which is for your options chains. And then you can click on the options play tab, which will give you the same April 7th 185 call. Right now, you're going to generate about $140 worth of income on a stock. Well, let's change this to Boeing just so that you can look at the stock here. But you can plug this any stock that you want, and it'll show you exactly which cover call to sell, how much income that you can generate. Let me just find a few more stocks. Let's look at Meta's probably not a good example because it's a $600 stock. Let's look at Amazon, right? Amazon recently, is trading at $200. Maybe still maybe a little bit high price stock, but maybe many of you own Amazon. Selling the April 17th 230 calls will generate $146 worth of income. Again, paying for close to 4 months worth of your service with that. Looking at I'm trying to look at some other stocks that maybe many of you might own in your portfolio. Maybe AMD. A lot of you may have semiconductors in your portfolio these days. Like I said, plug in any stock that you own into the tool. Sell the April 17th 120 cover calls, generates $83. That will pay for 2 months of the service. Again, cover calls do not add additional risk to your portfolio. I'm not trying to tell you strategies where you can potentially make $83, but then you could potentially lose $200 in the back end of this. These are strategies that you can't lose money on from the options piece of it, right? Obviously, if you hold on to the stock, you're going to lose money on the stock, but you own the stock anyway, right? The goal of these cover calls is for the stocks that you own anyway that you're planning on holding. What we're doing is we're adding additional income to your holdings, and that additional income will help you offset the cost of the service. Okay, so like I said, all of this is available to you for just $40 a month, and the best part of it is that we are not done. This is just phase one of the integration of the partnership that OptionsPlay has with StockCharts.com. We are already working on phase two. We're actually not too far off from releasing phase two. Phase two will basically allow you to run the strategy center that I just showed you, which is the strategy center that we showed you here before, but run it on not only the scans that we have pre-built for you, but to run it on your own scans and to run it on your own chart list. So many of you have your own chart lists. Either you're running your scans to populate chart lists, or you run your own. You have your own chart list set up. We'll be able to allow you to run this entire strategy center on your own chart list. And if you are running your scans using the advanced scan workbench, which is what we use to build these scans, meaning if you build your own custom scans and you run a scan, you can then run the strategy center on all of the stocks that pull up from your individual customized scan as well. So that's coming in phase two. That will all be part of your OptionsPlay add-on. And like I said, if you add on your subscription now, you'll be able to join us for our next members education session. We run those every single 4 weeks, so once a month. The next one is coming up on March 18th. The first couple of ones we've already covered, the top 3 option strategies. We've covered all of the income strategies. We've looked at cover calls. So the next one we're going to look at is the #1 option strategies that hedge funds use. I'm going to show you how you can use the strategy center to automate the exact strategy that hedge funds use and identify the best yielding opportunities for that. So that is going to be available for you. If you start your subscription or your add-on now, we will automatically register you for that event so that you will automatically get the invitation to that March 18th event at 12 p.m. That's a $200 value just in that seminar alone. So if you get started today for $40, you'll be able to unlock that $200 value of that next upcoming event. We want to run one of those events every single month as a member. So you're getting access to the strategy center. You're getting access to the integration of the OptionsPlay tool that can help you find, the cover call strategy to help you pay or offset the cost of this tool for any of the stocks that you own, and you get access to the exclusive members only event coming up in 2 weeks' time, which we run once a month. And I'm really excited to be releasing phase two, to you guys soon. That will give you access to kind of being able to do a lot of these screening capabilities on your own screens and your own chart list, which we're really excited to bring on. So you can either scan your phone to point your phone to that QR code to get to the page where you can add this onto your StockCharts membership. There's a Q&A window at the bottom of your screen. There's a chat window and a Q&A window. If you don't mind, please bring up your Q&A window, and I'll try to answer your questions through that as well. Or through the Q&A window, not the chat window. So please, if you have a question, bring up the Q&A window and type your questions there. Joe is asking, on the subject of risk management, do you have any general advice or suggestions on when to take profits and when to exit a failing trade? Great question, Joe. This is actually something I covered in our first members only session, which was about a month and a half ago at this point. And that is available to you as a recording as a member, where we cover the best practices for taking profits and cutting losses on all of the strategies that is covered in the OptionsPlay Strategy Center. So we did a pretty comprehensive review. I think it was nearly a 2-hour session where we did a deep dive on every single strategy that the Strategy Center supports, and talk through kind of where you want to, at what stage do you want to cut losses? At what stage do you want to take profits, and how to manage these trades? So, Joe, that is all included as part of your membership. That kind of information. Both the recording and the slides will be available for you to go at your own pace and learn those specific thresholds for taking profits and cutting losses. What is the difference between the list in OptionsPlay versus what you're showing in StockCharts? So the trade ideas are the same, whether you subscribe to OptionsPlay directly through OptionsPlay or you subscribe to through StockCharts.com. Those lists are the same. The difference, obviously, is the integration at StockCharts. You can view the charts in ACP and stock and SharpCharts, and you also have, like I said, in phase two, you'll be able to run your own screens in StockCharts.com and still have the strategy center on your own screens. What is the name in StockCharts of the few indicators you have under your chart? Because I would like to add them to my charts. So the charts, the question was, what indicators do I have under my charts? So let's look at this real quick. I have the ratio chart, right? So that's in chart settings, that is the price performance chart. And what you can do is you can do the symbol relative semicolon XPX, right? So basically what that does is it compares your symbol that you have up versus SPX. That's the ratio chart here. So when I have NXPI, it tells me how is NXPI performing relative to the S&P 500. And below that, I just have a standard MACD. Nothing fancy. I'm not a fan of a person with like lots and lots of indicators. I just want to know how is the chart doing relative to itself, and how's it doing relative to the market. Michael's asking, which technical scan corresponds to the iron condor strategy? Great question. So technically, there aren't any technical scans that you can screen for kind of a neutral view. But if you look at kind of when do stocks tend to consolidate, they tend to consolidate after big moves up or big moves down. And that's what the counter trend strategies identify, right? So for example, when we're looking at, let's look at bearish counter trend again, right? And I think AT&T was one of the ones that we were looking at, right? So, when do stocks tend to consolidate that are best for iron condors? They tend to do that after they make big moves in a short period of time, right? After stocks make big moves after a short period of time, that's when they tend to have a period of consolidation. So from my perspective, if you want to use iron condors, the best thing to do is to combine them with something like a counter trend strategy. So let's look at this. Gilead Sciences. The stock has made a big move, right? So like, I'm just trying to find like an example of this. Like when the stock makes this big blow up like this, right? It tends to kind of trade sideways for a period of time afterwards before it continues. And that's what we've gotten. Again, a big move here to the upside, extreme move here to the upside. And when we start to get a consolidation, they tend to move sideways. So my preference for iron condors is to trade something like this. So here, as you can see, what I'm doing when it's trading at 114, we're selling the 105, 110, 119, 125. That gives me a break-even price of 107 and 121. So let's take a look at that. 107 is down here. 121 is about up there. I can't, it's probably, somewhere up there. And basically, as long as it kind of stays somewhere between these two ranges, then I'll be profitable at expiration, right? It is giving me about a 1 to 3 to 1 risk to reward ratio, which is really good. It means for every $1 I can make, I'm only risking $1.30 versus an iron condor you down here. For every $1 I can make, I'm risking $2.20. So on the Coca-Cola one, right? So as you can see, that's a pretty big disparity in terms of risk to reward ratio between the top performing strategy and the bottom performing strategy. And that's why we built this tool so that, if you had to manually search for these iron condors on these 6 stocks, it would take you a lot of time to find a 30-day balance iron condor for this, right? And maybe you can take a more conservative approach, more aggressive approach. You can make these fine-tune these changes. Maybe you like to do 45 days out or 21 days out. You make these fine-tuned changes and basically very quickly be able to re-look at this. So now if I go 45 days out, as you can see, there's a lot more options here. Now, Yum Brands, interestingly enough, I can collect a lot more. I can collect 67% of the width here. So Yum Brands trading at 161. If I sold the 155, 160, 165, 170, I'm going to collect $3.35, which is going to give me a really nice risk to reward. For every $1 I can make, I'm only risking 50 cents. So it's really giving me, the best options here at the top of the list. Versus kind of the worst, even the worst ones at the bottom of the list are not so bad. So that's a scan I would use for iron condors. Hopefully that answered your question. When will you be able to put by default our personal setup, like preferred strategy, time frame, max risk? Okay, a great question, Joanne. I will speak to the team. That's actually not part of phase two, but that's a pretty simple request, Joanne. I'll see what we can do about putting that in. The question was just, can we, automatically say like every single time I just want to look at bull put spreads, and I like to do 21-day balance bull put spreads with $1,000 worth of risk and save these settings as your default so that every time you come in, you will automatically have these default settings. That was Joanne's request. And that's a good request, and I'll put that in and see what we can do. Christopher, at the moment, our plan is to keep the price the same for phase two. But at the very least, I think what we'll do is if you're a subscriber before we roll out phase two, we won't increase the prices on someone who's already paying for it. What is the liquidity rank? Liquidity rank is basically just seeing how liquid is the option. It's 1, 2, or 3. Very liquid, somewhat liquid, or not very liquid. It's designed to, and we won't show you anything that's not liquid, right? We'll only show you things that are either liquid or somewhat liquid, meaning something that you can trade options on. We generally will not recommend you to trade something that's not very liquid. How do you select a debit or credit, seller or buying for the strategy? So that's in the strategy itself, right? So bull call and bear put, these two, those are the debit spreads. Bull put and bear call are the credit spreads, or simply long calls or long puts are obviously debits. Cover calls or short puts are obviously debits or credits, and iron condors are credits. So it's just by selecting the strategy, you will automatically be selecting a debit or a credit. In the income section where we pick cover calls, can you add an earnings flag? Yeah. So okay. So I see what you mean. Yeah, because we typically have the earnings on the quote bar, but that's not available here at StockCharts.com. I guess you only have that in ACP where you have the upcoming earnings in there. I'm sorry. We do have a earnings state. So as you can see in the risk and checklist, right? And also if you click on the trade button, it'll have a strategy checklist, which will check for the earnings state. So there is an earnings flag in here. So you can access it two ways. So you can either click on risk and checklist, which will check for the earnings state, right? If you get a little green check mark, that means there's no earnings coming up. Or you can click on trade and it'll also bring up the strategy checklist and tell you if there's an earnings state coming up. What is IV rank? IV rank is comparing the current implied volatility to its own 52-week history. For example, IV rank of 40 means that Yum Brands, if you look at the range of implied volatility over the last year, it's in its 40th. It's not 40th percentile. It's 40% from the min to the max over the past year. So 50% means that it's dead center in the middle of what the min and the max was over the past year for Intercontinental. Can we set a criteria for open interest and volume for an option? No, because open interest and volume is not a good indicator of liquidity. We already scanned the liquidity for you because liquidity is much better gauge for liquidity is the size of the bid-ask spread. That's a far better gauge for liquidity. Because if an option was just listed yesterday, right? So, because weekly options are, listed once a week, right? So it was just listed yesterday. For example, if an SPY weekly option was just listed yesterday, open interest and volume is going to be zero, but it's very, very liquid because it's SPY, right? So there's a lot, open interest and volume is really not a good gauge for liquidity, especially when you have things that are dailies and weeklies that are just, listed very relatively recently, but just because it's listed recently doesn't make it any less liquid than something that was listed 3 months ago, but it has very low open interest and volume because it was just listed recently. So that's why we don't like using open interest and volume as a gauge for liquidity. We look at the bid-ask spread as a far better gauge. And that's what goes into the liquidity rank here. There is some open interest and volume information that goes into our calculation of liquidity, but we're looking at the open interest and volume of the entire chain, not just the open interest and volume of the option that you're trading. Why do you use vertical credit spreads when using bullish trend following and not call spreads, then vertical call credit spreads for bearish? This was just for example purposes. This was not meant to say, do this, don't do that. This was just to show you kind of all the different strategies that you can trade for different strategies. But at the same token, there's nothing that what was your question? Why do you use a vertical credit spread for bullish trend following? There's no reason that you can't sell a bullish, a bull put spread for something that's trend following. Just because something's trend following doesn't necessarily mean that you believe the stock's going to make a big move in a short period of time. You want to buy call spreads when you think something's going to make a big move in a short period of time. I wasn't necessarily trying to say this is the best strategy for that specific scan prior. This was just kind of showing you what you can do. Does it work well if we a short put writer and want to know what stocks are trending bullish? Yeah, you absolutely can do that. So you can do short puts for any of the bullish scans, right? So bullish short puts, we automatically go to 30 days aggressive. So you do have to change the risk tolerance on that because it's taking into account the full risk of the short puts here. So for example, bullish trend following, Robinhood will collect the most yield at the moment selling puts. PDD, JD, Cloudflare, CrowdStrike, these are the puts that are going to yield you the most amount of yield for selling puts. So as you can see, selling a Robinhood $42 put when the stock's trading at 44 will yield you $2.80. That's 7.17% of the stock's value. You're getting a 7% discount on the stock purchase of Robinhood by selling a put option versus a limit order. You can put a limit order buy at 42, or you can sell the $42 put. The difference is that the $42 put gives you an additional 7% discount. It's hard to ignore if you're interested in buying Robinhood. CrowdStrike, maybe CrowdStrike's not a good stock. It's a $300 stock. Let's look at JD or Dexcom. Trading at 82, sell the $80 put. You're getting a 3.19% discount. Look at how many stocks that you can get over 5% discount on using the put option versus using a limit order. What if you can get a 5% discount on every stock purchase you buy? That can make a meaningful difference in terms of performance of your portfolio. So all of these are available to you in this tool. How often do the suggestions change by minute? It's in real time. So every single time you click on update, we're pulling the option chains, we're pulling the real-time chains and giving you the pricing for it. So it's changing every single time you click on the update button. How do we find out that an option that is in trouble? How do we find out about rolling the option? Look, Jeff, I think your question is rooted in if I'm losing money on a trade, what can I do to repair it? And the short answer to your question is if you're losing money in an options trade, 99% of the time, it's better just close it out and move on to the next trade. Anything that you do to try to fix it or repair it is just going to add more risk to the trade. So you're throwing good money after bad money, and that most of the time will end up being a worse decision than just simply closing it and moving on. But I do have a whole course on this. Like I said, we did a 2-hour course on every single strategy that the Strategy Center covers. And I showed you best practices for entry and exit for all of those. So check that out once you set up your membership. Do I have to modify the scans if I want to check the Canadian market? So currently we don't offer this for the Canadian markets. That is one of the things that we are looking at for phase three. It depends on kind of the number of requests for it. So if you do need this for the Canadian markets, let us know. We'll put that into consideration as we're thinking about phase three. We currently have access to Canadian data. We actually offer an OptionsPlay Canada as well. For those of you that if you want something for the Canadian markets right now, you can look for OptionsPlay Canada, and you can use that for now until we build an integration with StockCharts.com that also includes Canadian options. Do you think that trend following strategies are better for long-term options due to short-term charts having a lot of noise? Similarly, do you think breakdown strategies are better for short-term options that involves capturing quick price movements? I don't necessarily think that either one of them is best suited for short-term or long-term. For me, whether I believe something is better suited for short-term and long-term is more rooted in the fundamentals of a company. So if I identify something that, the scans are more so from a timing perspective, but whether I think that the opportunity is long-term or short-term is more so rooted in the fundamentals of the company, right? So if I think a company is fundamentally undervalued by a significant margin, then I usually think of those as longer term plays versus if I think of something as maybe more fairly valued or moderately undervalued, I usually think of those as shorter term plays. So for me, it's more based on the underlying business itself rather than the technicals. I don't think the technicals themselves are enough to tell you whether something is going to be a long-term or short-term play, in my opinion. How likely are the premiums show on options play actually available when you go to place a trade? Well, we can only show you uh, prices as soon as they're available to us. It depends on how long it takes for you to pull up your platform and try to execute it. Here's the thing is that like as long as the prices haven't moved wildly away from where you had done the analysis, you should just execute the trade based on the current price because chances are, it's a perfectly valid strategy if you look at it 2, 3, 5 minutes later. Do you have an educational site on all the option strategies? I just know the basic calls and puts. Yeah, so we do a lot of education, James. Like I said, the first education session we just did a few weeks ago covered every single option strategy in depth, best practices, concept of the strategy, as well as um, uh, entry and exit rules. So that's all covered to you and a part of your membership. So when you have your access to your Options Play membership, you will have access to if you go to Options Play with Tony Zhang under the article section, this is all the available content that we have, including the sessions that so for example, the last one that we did here on February 19th was the how to grow your options trading account. That's available to you here. So it's under your articles section. And then you can quickly find us under the members only section for Options Play with Tony Zhang. So the one that you're looking for here goes back to if it's not, I'll make sure that the team uploads it so that you can access it, but you'll be able to access it through here because the last session that I just hosted here, as you can see, is available here, how to grow your trading account. That was the last members only session that we just hosted. Okay, I think, this has gone well over an hour of time. I've taken more than enough time of yours. I really appreciate everyone that's taken the time out here today to join us. I hope this is helpful in showing you kind of what capabilities are available to you at stockcharts.com. I hope that you guys see the value in this as well. We've worked really hard in this partnership with StockCharts.com. It is a tool that I use almost every single day as a result of this partnership. So I'm really proud of what we've built because a good test of all of this is whether or not the people who build it are using it on a daily basis. And I use it every single day to help me find my option strategies. So I hope that it's helpful for you as well as options traders. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here hopefully on the next members only session in 2 weeks' time. Have a good one.